Hey everyone, welcome back to Corporate Decoder. Today, Core University Living Real Estate Income Trust just filed an 8K, and I am seeing a significant equity sale that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company sold a substantial amount of stock, and we need to understand why and what it means for investors. This filing of Form 8K is like a company's public diary, used to announce big news that investors need to know about right away. Think of it as a heads up for anything that could shake up the stock price. Now, the main event here is about selling shares, but not just any shares. This section of the filing, item 3.02, talks about unregistered sales of equity securities. That means they sold stock without going through the full, lengthy, and expensive process of registering it with the government. The company, Core University Living Real Estate Income Trust, sold two types of common shares, Class A and Class E. They sold a whopping 9457500 Class A shares and 3690759 Class E shares. Let's break down the money for the Class A shares. They brought in $94,575,000. For the Class E shares, it was another $36,907,590. Adding that all up, they raised over $131 million. That is a lot of cash. The filing explains that this sale was allowed because it was exempt from the usual registration rules. They're relying on a specific part of the law, Section 4, Art 2, and a rule called Regulation D. In simple terms, this usually means they sold these shares directly to a select group of investors, like big institutions or accredited investors, and did not advertise to the general public. This is common for raising significant capital quickly without the red tape of a public offering. So why did they do this? Companies often raise money through stock sales to fund growth, pay down debt, or for general corporate purposes, without more context from the company's management. It is hard to say exactly why they needed such a large sum. However, raising over $131 million is a significant financial move. It could signal ambitious expansion plans, a major acquisition, or perhaps shoring up their balance sheet. A big question for investors is dilution. When a company sells more shares, the ownership percentage of existing shareholders gets watered down. If you owned 1% of the company before, you now own a smaller fraction after all these new shares are issued. The sheer number of shares sold here means existing shareholders will see a noticeable dilution. Another point to consider is the price. They sold Class A shares for $10 each, $94,575,000 divided by 9457500 shares. The Class E shares were also sold at $10 each, $36,907,590 divided by 3690759 shares. Selling at a consistent price like this suggests they were able to get good value for their shares, but it also means that if the stock was trading much higher on the open market, existing shareholders might feel they missed out on maximizing value. The filing also notes that Core University Living Real Estate Income Trust is an emerging growth company. This means they are a relatively new public company and get to follow some slightly relaxed rules. They've also elected not to use the extended transition period for new accounting standards, which is generally seen as a sign of not wanting to delay financial transparency. While this filing doesn't contain detailed financial tables showing revenue or profit, it is a crucial piece of information for understanding the company's capital structure and future funding. Raising tens of millions of dollars is a big deal. It means the company is actively managing its finances and likely has plans that require substantial investment. My take is that this equity raise is a significant event given it is an emerging growth company. They are likely in a phase of aggressive growth or development. The key will be watching how this capital is deployed. Is it fueling new properties, expanding existing operations, or deleveraging? Investors need to keep a close eye on future filings and company announcements to see the impact of this capital infusion. The risk I am watching is whether this new capital will generate returns that outpace the dilution, and the opportunity is that this funding could supercharge their growth trajectory. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my tape. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.